Hi everybody, Drew Stegman here, and I want to make this video to talk about what's going on in the financial markets right now and why the US dollar is headed for hyperinflation. Now, a lot of people might call me crazy for saying that, but this is going to happen eventually. So, if you remember after 2008, the Federal Reserve did quantitative easing. They did quantitative easing 1, QE2, and QE3. So, in that program, they bought over $4 trillion of government bonds, mortgage-backed securities, and other types of financial assets. Okay, now, a lot of the money they put into the banking system through quantitative easing was through the purchase of government bonds. So these banks had all this money in reserve, and they were basically lending it out to other financial institutions. And this was supposed to stimulate, quote unquote, stimulate the economy. But what it really did was it resulted in a lot more debt being created. And that's the essence of what the Federal Reserve does. They print money out of thin air. They put it in the financial system. The banks lend it out to whoever they want, typically large financial firms, and then these financial firms lend it out to companies, and these companies use the money to buy back their stock. So it's completely not it's complete nonsense. Let's just say that it's a debt-based monetary system. The debts are going to keep on growing. There's nothing that will stop the debts from growing, especially with all these bailouts coming out right now with the coronavirus. I mean, this is complete nonsense. You cannot bail out companies. You cannot just bail out the entire economy without creating massive inflation. Now, this might not hit right away, right? This might take years for this to unfold, for these dollars to really come into the actual economy and result in hyperinflation. But we're going through that process now. And the more money they print, I don't care what the Federal Reserve says about quantitative tightening. They tightened for what? Maybe a year or two? I mean, they're not going to tighten at all. They're just going to keep on lowering interest rates, probably go negative here very soon. I mean, I would say in the next few years will probably be negative. In fact, some government debt is negative right now. The 3-month government treasury bond is negative, which means the government gets paid when you buy a 3-month treasury bond, which means you lose money, right? This is complete nonsense. This is not going to work. I mean, this is the exact same thing that other nations like Weimar Germany, remember Weimar Germany in the 1920s, they printed massive amounts of money. Their economy collapsed. They went into hyperinflation. And what's going to stop the United States from the same thing happening? Now, granted, there are a lot of countries like Europe and Japan that are printing money at the same rate or even a faster rate than the United States. And actually, recently, the dollar's gone up. But don't look at the short-term trend, because a lot of this is just liquidity, right? People are selling everything because of the coronavirus. People are getting back into dollars, and that's resulting in the dollar going up. But don't look at these short-term trends. You have to look at the long-term trend, right? You have to look at the fact that since 1971, the dollar has lost a considerable amount of value. Interest rates since the 70s have gone down, and they're going to continue to go down, and they're going to go negative. Donald Trump talks about negative interest rates, like this is a good idea. But eventually, there's going to be no buyers for treasuries, because who's going to buy treasuries if you're getting a negative yield, if you have to pay the government? I mean, this is completely idiotic, right? But the only buyers of bonds in the future are going to be central banks, because central banks are the only ones who are going to be willing to actually pay the government money to loan them money, that they're going to be willing to pay the government. So this is complete nonsense. And of course, the Federal Reserve can create money out of thin air, and so that's what's causing the problem. And this is not going to stop, right? There's not going to be a gold standard again. I mean, maybe if the dollar collapses, there will be, but no time in the foreseeable future. And in the long run, no matter how long this takes, the dollar will collapse. Other fiat currencies will collapse. And you need to ask yourself what is best for your portfolio, not just your stock portfolio, but really your entire portfolio across the board, all your financial assets. And of course, buy silver and gold. But there's other investments as well, such as physical real estate, cash flowing properties, which go up with inflation. But also, you're still going to own those properties if the dollar collapses, just like you own silver and gold. So you need to get out of U.S. Treasuries, especially if you're in the Treasury market. You need to get out. You need to sell your Treasuries because inflation is going to wipe out all that purchasing power from your government bonds. So this is going to be a process of massive devaluation, extremely low interest rates, and of course it's not really impacting the supermarket right now. It's going into financial assets, it's pushing up the price of stocks and real estate. But of course all those gains have been lost, or a lot of them, since 2008 in recent weeks as the stock market crashes. But I think the Federal Reserve will try to inflate this bubble more, as they're already doing right now, but it's not going to work. And it's going to result in more problems down the road. And so you need to protect yourself. You need to get out of U.S. Treasuries. You need to get out of the bond market. Get out of everything that is denominated in U.S. dollars and other fiat currencies as well. I mean, don't just look at the U.S. dollar, but look at the euro, look at Japan. These nations are going down with the United States. But I think the United States is going to get hit the hardest. And the reason I think that is because we've printed more money. I mean, we have a larger gross domestic product, but in addition to that, we're also the world reserve currency. And so when people really start to sell treasuries and when people really start to sell the US dollar, this is going to result in hyperinflation. And like I said, it might take many years, but you need to start preparing right now because this is going to be very bad. Anyway, guys, thank you so much for watching. And if you like this video, be sure to hit that subscribe button.